don't mean just like people who just started yesterday. I mean people who've even been doing this for a little while. They have like no consistent approach. So like this day they're using Bollinger Bands. Bollinger Bands with an RSI crossover or something
or
like that.
Or even more broader than that, some people don't even really draw the line between a technical analysis approach or a fundamental approach.
Sure.
You know what I mean? Like I know a lot of traders that'll kind of confuse their thesis in there. They'll say, oh, well, it pulled back to a level. And also the company's doing really well. It's this.
They're trying to sell themselves into a trade almost.
Yeah, and granted, those things could help maybe, but
sure,
you have to clearly define your approach. And I'm not saying that can't work, a technical and a fundamental
now,
approach.
It definitely could, but you have to know which one is which. Yeah, exactly. Yeah. A total lack of approach of when they're going to do something, right? A breakout trader should know, okay, when prices gotten above this level, I know I'm going to do this until X happens.
Right.
For us, we're waiting for the retracement. We know when a certain move has happened, and then we're waiting for that move to come back to us. It has to fit these criteria,
right?
And that's our approach, and that works for us. There's only a handful of patterns we trade, and knowing that, we can explain to someone what we do inside of 30 seconds. How we trade, as opposed to someone who's like, well, I do this sometimes, I do this sometimes. Right. Consistency for like a couple of the moochers who want to come in, always like, can I do Bollinger Bands here and RSI on this one, and then can I do a breakout trade on this and all that kind of stuff?
You can do whatever you want.
Do whatever you want.
Probably not going to work out consistently.
You're not going to know you can drag X dollars out of the market.
Right.
So with the way we trade, and you have let's say 10 grand in your account, you can start to predict your income after a series of months of doing this. You can say, like, if I get this many trades a day, risking 100 to make 300, I'll get $500 a week in extra income, or whatever number you want to see and how much active you want to be on. But with all this other stuff, it's so subjective because you can't predict what you're going to make in any trade because you don't have an approach. If you're just every time like, well, I might do this, I might do that. And Mitch wrote a great article a while back called "Finding Religion," and it really the point is like, it's not controversial about religion. I mean, they think of religion being like finding your trading style, but it gets people to really think about it clearly. Like, you find very few people who are Jewish, Catholic, and Muslim, right? Usually you pick something and you're with it, right? Same with trading. Like, we are technicians with a focus on price action, right?
And I'll tell you, I think that was like a pivotal moment in my trading career so far, is realizing that you can't just rely on luck. I kind of just got into trading at first, and I got lucky on a few trades.
Oh yeah,
I thought I was a genius at first, until you have a couple big drawdowns, and you're like, well, if I'm going to do this for income, if I want to do this as a career, I have to find a consistent approach to doing this. I have to, so to speak, find religion. To your point, and that's when I signed up with you guys, and I started the program and everything like that.
And it's funny, for one of the guys who I thought was being in the trading community in New York, you meet people and all this kind of stuff. This guy said, I'm trying this, I'm doing this, and I'm making money trading futures. And I was like, oh, great. And I've been at this for the last year, and I'm trying to get more rules. So it sounded he talked a good game, and he wasn't trying to sell me anything. He just was trying to get better at it.
Yeah.
So he invites me. He writes at office the same way we did. I go down to his office right off of 8th Avenue. And, I think we're all, we're going to be able to compare notes on stuff, right? And I go there, and he goes to his and I was like, what did you trade today? He's like, oh, I was just looking at the Dow. And I'm like, all right, well, you're looking at the Dow. I didn't see anything there. We're supposed to have a very similar approach, almost the same. And literally, he sits down at the computer, like, the Dow's going up, it went up 10 points. And he's trying to put a trade in. And I'm like, I get in the way of his, getting to the trade, because I'm like, what are you doing? Like, it's gonna hit, I see a small zone, but I didn't know, but I was like, well, what's your plan here? What are you going to do? He's like, well, it's going up. I figured I could just make, a quick, 20 points or so on it. So 20 points is $100. So he probably thought he could make a quick $100. And I literally saved him some money that day.
Sounds like this guy's doing everything that we just mentioned.
Everything wrong. I want to say his name in case he hears it, but I hope to God he doesn't do this anymore, because he just couldn't put the time into seeing what he wanted to see, the way you should see it. And he spent a lot of money to learn to trade. Yeah. All right. So
you pay tuition one way or the other.
Yeah. Well,
do you pay for some sort of mentoring?
He paid at least he bought a seminar, right? And then some follow-up programs, but never a hand-holding thing, right? So he goes and he spends 25, 30 grand to learn to trade, and he still can't trade. right? And he's at this. He's not at this like 6 months or so. Like I struggled for a couple months after I took my first seminar, but a couple of months and then a couple of years, two different things.
Yeah.
And total lack of approach. He didn't decide on his approach.
Right.
You know, he went from this to, you know, and you know somebody else the same thing. The old guy in the office never could find his approach. He really was just like, I would buy at the end of the day on a stock that was really strong. Mm-hmm. He was one gap down from ruin. And guess what happened to him? He gapped down on Twitter and it ruined his account. Wow. Only margin call I've ever seen in person. Yeah, 15 grand gone. 15 grand gone.
So I think, you know, some of the biggest walkaways from all these and some of the commonalities I think that these 5 points have is really, you know, finding a strategy. Yep. And then once you have that strategy, sticking to it by taking the emotion out of it and really just letting the guidelines of your strategy guide you.
Strategy and tactics,
and follow it blindly, yeah.
Yeah.
And
let it do it. Wait for your picture perfect setup. So find your approach, right? Then know what that setup looks like. Have rules to not trade too much. Have a rule for how much you're going to buy in any good trade, right? No concept of risk reward. Know that if you're going to get into any trade, what is the payoff going to be? Meaning that how much you're going to make and then how much are you going to lose if it doesn't work out. Right. And then on the emotional side, you're never as bad as your worst trade and you're never as hyped as like your best trade. So